This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. So we could have a little bump there, August 12th timeframe, with the expectation that CPI is falling closer to that 2% handle. Anyway, that's what the market would like to see. They would price rate hikes out. Right now, they are pricing still September, 65% chance. That's pretty high. So CPI would pull that down. That would be market bullish. Remember last time we had a big fall in core CPI, the market had a big bounce. So that's why I'm focused on the fact that I didn't think Warsh would hike, and I wrote that up. He didn't, but he does have 3 dissents. That's a big deal. We did have the short end stay firm, the long end move higher. That's also AI kryptonite. And markets had a 1.5% intraday fall before bouncing. So right now, if we can get this next 2 weeks of a little bit of chop here, we could actually have a little reflexive rally into the core CPI, which likely falls. And midterm, Warsh is obviously going to play that deflation game for a market bounce. But for right now, I'm just trying to time a durable bounce. So that's it in a nutshell. As expected, talked about written. Fed did not hike yesterday. September has a 65% chance. We're going to be watching the data in August, not just Jackson Hole, because that's a lot of more talking out both sides of his mouth, but definitely the BLS report, the CPI report. And if it shows core CPI is falling, then it's going to be very hard for September to get rhythm of a hike. But Lori Logan hiking on that plot for a hike is very noteworthy. So for me anyway, I'll be watching this a little bit more closely as we get into August. Yeah. So anyway, that's August 12th. And the dollar yen is doing this fake breakout fast failure. Very supportive for the market, right? Is this moving higher? Dollar's moving higher. Well, this just did a boom, boom dump all the way back down to 163. If it breaks 162, it's going to be yen bid. That's very important, but we're not there yet. So dollar at 100.5 is a core support level. If we break it, it heads below, got to stay below. Otherwise, it likely consolidates there and bounces. And then the dollar yen coming back into 162, that's support. If it breaks and gets below, yen moves higher. And look, this was, I mentioned the dollar yuan. I said it would not surprise me if this continues its trend. What is the trend? April intervention was the high back in literally April 8th, and it was in that 7.4 area. It has come all the way down. It consolidated for a little while. And I said it wouldn't surprise me if the dollar does its little pullback on Fed. Very, 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 very strategic. But now it's got a hold. And the dollar yuan continued lower. So it's happening. This, however, this little puppy is a massive outlier that wants to revert. This is growth versus value, having a little growth bounce. Wouldn't be surprising. It has so much work to be really, really, really bullish. But the point is, we got 2 weeks until CPI, and we could have a nice little reflexive bounce right back up here in growth. Apple and Amazon need to not tank the market. Keep your VIX hedges, all that. But for the most part, I am expecting this kind of overshoot to calm a little bit, just a reflexive bounce. And then here is hardware software. You can see where it's also having a little bit of a maybe too soon bounce, but it's the same thing. It's extremely stretched, and it's just kind of saying, hey, I think we should have a little rotation here, hardware to software. I talked about that. But there is your big, big, big moves in the stocks, and some of them are bigger than others. You get these big, huge earnings beats, but more importantly, they are basically reacting to support, 30-week applied material, just to chase those short duration bears out of their puts into month end. Very, very clean. Very, very typical, by the way. So here's QQQ. And just to kind of remind, you've got a 30-week, and I had given 664.5, and the Qs came down to 661 and change. So close enough. And now it's having a reflexive bounce because it's 3 levels of support. That's important. 3 levels of support, and it's having a reflexive bounce up 2.66% today, heading up into that 682.77. So this is what we had yesterday. We had Wednesday, into the presser, a dump at the end of the day. SPY dumped 1.5%. It got supported. Ironically, I've got some kind of level here from April of QQQ 65692. Let's call it 657. And it's right back up into likely the 100-day. But here we are having this very strong reflexive bounce into the end of the month. It is not surprising. We hit the 664 and we are up to 680. So it hit a low after hours yesterday of 656. That's a stretched rubber band. So 656 low, and this 664 was my target. And now we're having a bounce into 683. That's what's occurring as we speak. And NASDAQ composite has not come back down all the way to 24,000. It also hit the 30-week. So we got these nice reflexive bounces. Now what? Market was definitely too one-sided. And right now we have the benefit of falling dollar. Gold is still waiting to see if it can really trust it. Rising NASDAQ and SPY on falling VIX, falling dollar, and put monetization because they held too long into Friday. Too dangerous, way too dangerous. But momentum is still weak underneath the surface. It is put covering, 100% put covering. What did we get for yen intervention? Look at that. That is so stealth intervention, something they can't do anymore. So there's a kind of a rule. Let me see what happened here. Look for the words rate check. Momentum is saying, yeah, really? I don't know. This looks pretty contrived. It's pretty contrived. Look at that steepener, though. I think it hits its head at 48. You are getting some put monetization and some bulls chasing a dollar dump and a yen intervention of size right back to support, however. Gold is now starting to think about it. ES is flat. Fed liquidity just bumped. Look at that. Extended snap back, growth, bounce, led by semis, which were overdone. You can't say that this is because of Microsoft. Trust me. It's not because of Microsoft. Look at the dollar yen dump. Didn't help the last few times, by the way. I've seen this rodeo before. You had a yen intervention. You had a yen intervention of size back here. And each time it got picked right back up, right back up. But they came for it, didn't they? And Qs are pushing into that 683. If you're still chasing the bounce, I would say 683 before the meeting. No, they were expected to hold. I haven't looked if there was any change to that. But again, Japan isn't hiking this go round. Yields will still stay firm. Look, that is exactly why the Qs are moving, though. You definitely have some intervention here in the house. There we go. That's what I wanted to say. Yep. Yen intervention currently underway. Fed not announcing any hike is definitely giving UADA some leeway. They have got to get the dollar yen below and keep it below 160. Let's see if they can do it. Wow, the suspense. Okay. Wow, Bank of Japan woke up and chose violence today. But hey, this has been negated several times. Look at these huge candles, negated. Huge candles, negated. That's a huge candle. There's no question about it. 160. How is it going to hold below 160? Let me go into a deeper time frame here. I think they're toast, honestly. They're shooting a lot of bullets. Yeah, 30-week is where it's destined to come back in. So this is the new PM. Remember that in October? All right, and the dollar yen has been pushing. And then, of course, if this gets and stays above, they're in big trouble. I'm talking about her administration. And so they're coming in and firing bazookas to try and get the yen supported, which, by the way, I'll just show you FXY. Look at that. Boom. So we're back inside, and the only way that this is going to be bullish is if it sticks. That's the problem. So these descending, political instruments, yen is a absolute hot potato political instrument. But the point is that's intervention. It is a 2-bar reversal. In other words, this week, it is negating lots and lots of shorts. But here it comes right back into resistance about 58. Let me just see if they're chasing this. Oh, look at the spreads blow out. Yeah. All right. So spreads have blown out in FXY, which is a proxy for the yen. And you can see a big bottoming formation here. We also had a big bottoming formation back in July of 2024. And what happened? The market sold off. Big yen intervention didn't help. But the point is, we had a fall from grace in NASDAQ and semis and NVIDIA and all that jazz on a yen intervention. Doesn't always happen that way. We also had the tariff terrors as a cause for the yen moving higher back into the April policy intervention of 2025. So we had the July to August 5th, and VIX went to 65, by the way. And then we had the tariff terrors, etc. Look, this is pure yen intervention, no question about it. They did some kind of rate check. UETA did something. I don't know what it is, but so dollar yen back in July 2024 was an intervention, and it was a below target CPI, and it led to this massive reversal back in July. And this is very important because I just started talking about falling CPI, which is very helpful, by the way, for Warsh to get out of the hot pot. In other words, right now the committee is kind of dragging him towards a hike. Falling CPI is going to make him look right. So right now you had a below target CPI in Japan. Bank of Japan tonight, I know it's Thursday, but their meeting is a day after the Fed. This is got a little bit more to go. That is, I'm telling you that this is all part of it. If you're chasing this long, you've got the wind right now at your back because Qs came down to 664. That was my third price target for the bounce into FOMC. We get a bounce, but it's being contrived, right? Not contrived. A buy Bank of Japan intervention and a CPI weakness. Talked about that where we could get some support here stateside in August 12th when we do a CPI. I just think they're going to have a really hard time hiking rates this year, if at all. So we got FXY pushing higher, Qs pushing into that 683. Did it hit? Yep. High was 682.32, 682.77. All right. So we get back above the 682.77. It's going to move up to the next little channel, 700. Puts are monetizing into the weekend for weekend for sure. But the Qs right now have the potential to get and stay above this 100-day and move up into 700. It would still be, look at this, lower high, lower high, lower high, lower high, every bounce, lower high. This is a wallop of a fall and now a bounce. Even if we got all the way up to 700, it would be a lower high. Man, was that just a perfect evening star reversal for the Qs and a bounce. Where's the bounce off the quarterlies? There it is. Oh, look at the bounce. Look at the Qs on a monthly. I know we have one more day. This is May. This is June. Shake and bake. 3 months equals 30%. We pulled all the way down and negated, obviously, May and June gains into a perfect tag of this 669 and the Keltner channel. And we're having a reflexive bounce. Where can we go? Where do we stop? Let's see what happens at 686 and change. 686. If you're chasing it, Tim, that's where I would think we get rejected, is that 686 area. Not chasing it, wrong word. If you're looking to add more protective puts, I would wait until the bounce gets up to 686. That's what I want to say.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.